support resistance zones. Those worked the best for me in trading, and I still believe those are probably one of the most important, if not the most important things to learn when you start trading is being able to draw out support resistance zones because they allow you to um, they're one of the few indicators or one of the few things you can use that, in my opinion, aren't lagging indicators. They can tell you where price may head ahead of time before it gets to a certain spot. So that's what I focused on. That's what I found success in, and I built a strategy around that. And then I kind of automated most of it. And when I say automated, I mean I made it easier for myself and anyone else to see when the rules that I look for get ticked off on the chart. So it just kind of tells you where you would enter if you were to follow this strategy. Now, of course, I look at other things too, but for at least for the zones part, it automates that part for you and it'll tell you where to take entries and as well as scale off the entries. So I put that in an indicator. We shared that out to you guys. We let you guys use that for a while we worked on other things also. And then since then, um, I've built the trend bot, which helps a lot. It keeps you on the right side of the market. I primarily use the trend bot um, to I primarily use it on the 10-minute and 1 hour to watch which higher level trend we're in, and to watch where what tick is saying, which is the red or green line, thick red or thick green line that you'll see on the chart suggesting which way momentum is going. So if you look on, let's just look at the chart that Trevor has pulled up. If you, this is on the 3 minute. If you, I personally don't watch it on the 3 minute. If you go on the 10 minute, that's what I like to watch it on. Um, and if you go to today, you can see that Tick started printing bearish. Well, today was kind of chop, but if you let's go to yesterday. Tick kind of started printing bearish while we were at the very top. Right before we dumped, you can see the first red thick line that started appearing on above the price, and that kind of suggested that even though technically we were in an uptrend when it first appeared, it kind of gave you a hint before the drop happened that, hey, if you're long right now, which a lot of you might have been, we were above support, we were in a green trend, we had bounced off a support zone, maybe exit your longs and get ready for a reversal, which is what we saw happened. Um, and then
What's
I
tick? What's
believe
tick?
Tick is so if you haven't used Tick before, I recommend reading up on it, but basically it tells you if a large percentage of the stocks in the New York Stock Exchange are participating in the current move up or current move down. If you see red, it means there are more declining stocks versus rising stocks in the market, suggesting a bearish momentum. If you see red tick while the price is going up for the index, such as SPY, it's kind of telling you that there's not a lot of stocks participating in this rally, which usually leads to a big fall, because all it takes is that one, maybe it might be a handful of stocks that are going up, lifting the markets up. As soon as those drop, everything comes crashing down. So if you see a red tick while the price is going up, it's a good sign to get out of longs. It's a good sign to maybe even start building short once you start seeing other confirmations, and vice versa for green tick. I hope that makes sense. If it doesn't, just send a message in the chat room and we can clarify. So I saw that. So you see that on QQQ yesterday, right before the drop happened, and then you could have started building shorts there, although that by itself would not be enough confirmation for me to start shorting. Um, but then you also saw that the trend flip to bearish. Now you have two things supporting a downward move, a bearish tick. a bear trend, and eventually you even get below this support zone that QQQ was holding above. So when you retest that support, which is now resistance and reject it, that's probably a good short entry. And you can ride the trend down if you notice that price did not get back above those 9 and 21 EMA lines, those thin green red lines that you see. And it kind of just rode those EMAs all the way down for most of the day. So that's just the trend bot. That's one way you can use the trend bot to kind of really keep you on the right side of the market. What I recommend is using all our tools together, and I've written out some guidelines that I use and how I use them together. I can quickly talk about those, but I also recommend saving what I've written. I can resend it after the Zoom call, and you guys can kind of go over it and learn it. So for me, the first thing I'll look at is what is 1 hour voodoo saying. Um, so on the 1 hour, the voodoo, let's go to like ES or NQ, I don't know, uh, will tell you when to short or when to long. And it works especially well outside of chop days. Even on chop days, you can get a few points out of it, but there's a good chance that it'll just keep flipping green, red, white a lot. But if you look at yesterday, you can see the first short signal from the voodoo happened a bit after tick became
The
bearish on the
105.
1 hour as well. So that 5159.5, I think, is when it sent the short alert
Mm-hmm.
for ES. So that's the first thing I look at. Okay, hourly voodoo has signaled a short. This to me in my head is above everything else. Now I look for further confirmations just to support this. On the 10-minute, which we had just looked at, I would have then looked at what the trend bot is saying. Trend bot at that point would have been bearish. It would have been on a bear trend. We would have also signaled a short already on the 10-minute, which again supports the bearish thesis. So those are the two things I would have looked at on the 10-minute. I would have pulled the trend bot up and seen the current trend on the 10-minute and seen what tick is also saying on the 10-minute. Both those support going short. Um, Finally, I would sometimes I will front run this hourly voodoo if there's a 10-minute short signal on the voodoo also. Although you need to keep in mind the hourly triggers on the voodoo, in my opinion, are the most accurate ones. It might feel like you're entering a move late, but if you see that signal, almost always it'll at least get you 20 points on NQ. At least I'm usually pretty conservative with my profit takes. And it'll get you several, maybe at least 5 to 10 points. And that's extremely conservative on ES. So sometimes I'll front run that with the 10-minute voodoo. If 10-minute voodoo lines up with 10-minute trend bot and the 10-minute background color, which is red, then I'll take the short. Um, So those are the three main things I look at: hourly voodoo, 10-minute voodoo, and then trendbot on the 10-minute. And then the final thing that would really help going in would be where are my zones? And you can have the zone bot pulled up, which will tell you exactly where buyers and sellers are sitting on the market. Are we sitting above a support? Are we below a resistance? Um, so in this example, let's say we were below a resistance. That should honestly solidify a good sized short entry for you. Everything is supporting going short. If we were sitting above a support at this point, I probably would wait till we would get below the support. If I were to enter beforehand, I would go a very small size and look to size up once we get below the support and be ready to stop out if the trend on the 10-minute flips back to bullish. Um, that was a lot, but in my head, that's basically the things that I look at to kind of combine all these indicators together to give me a good idea of which direction I want to trade in. Any questions?
Do you ever, are you going, I know what the answer is, but do you go against the trend? So would you be longing when the background is red or shorting when the background is green?
Um, I have it's less safe. Usually if I do that, it's with lower size, and a lot of times the main issue is fighting the hourly voodoo. That's what's really my success rate goes down if I do that. Sometimes I still do it and come out with a win, but if you can avoid that, then avoid it. Like if the hourly voodoo is just alerted along and you're trying to short, um, just don't do it. For most people, just don't do it. I'm watching other things too, like I'm reading tape and I'm seeing where orders are sitting on Bookmap, seeing if they align with my zones, and if those other things align, sometimes I'll kind of end up fighting the hourly voodoo signal, and most of the times I end up losing, or I end up having to navigate my way out of the trade by averaging in, which isn't normally a good thing to do. So if you can put that hourly voodoo signal above everything else, don't fight it. Even if you don't want to follow it, at the least, don't fight it. Wait for the hourly to support the direction that you're trading in. And then after that, look at the 10-minute trend bot to make sure you're trading in the right direction. And then 10-minute voodoo is great. Many times I take those alerts. Just keep in mind the lower time frame you go down to. For example, let's say you even go down to 3-minute, the more noise you're going to run into, you're going to get more false signals. So if you're kind of following the voodoo on these very low time frames, be ready to stop out as soon as it flips. Like let's say it gives you a long alert and then a candle closes white, you have to kind of be emotionless and just stop out, just stop the trade. Or if it flips red, then flip short. That's the main thing. Like the lower time frame you go, the more noise you're gonna encounter. So that's why I recommend hourly first, then the 10-minute. The ATR lines, let's quickly talk about those because I completely forgot to mention those. Those are important too on the trend bot. So another thing that I will look for, if you can find an instance where it's kind of touching an ATR line. Okay, like right here. Um, let's see. So I guess this it still kept going, but I'll still use this example because obviously it won't work every time. I guess you can kind of see it worked, but not completely.
You
So
want
you
like a
can
better
see
one?
that no, let's just go out in the example that didn't work because it won't work every time. But at least you can see what I mean. So look at the spot where ES, oh, this is the 5-minute. I watched it on the 10-minute anyways, but we'll just use this. So on the 5-minute, you see where ES touched the that red ATR line, right? What this is telling me is if this was on the 10-minute, what it would be telling me is okay, tick is bearish, and we're touching an ATR line. What this is telling me is that price has reached extremes of its average true range. Normally, when it does this, it's going to reject. And especially because the tick is bearish, that's giving even more confidence that price is going to go the opposite way since it's going up currently. So bearish tick suggests it's going to go down. So it should bounce off the spot. So this is telling me if I'm in a long right now, close the long, wait for it to at least retest the EMAs. But the fact that it's bearish, I would have just closed longs and not re-entered. So that's kind of me showing you it won't always work. This is a bearish tick, and we kept going up for quite a bit. Um, so yeah, that's the whole point of the ATR lines. If price is touching the ATR lines, there's a very good chance that it's gonna at least get away from that line. It's gonna go the opposite way, at least for some time. So if you're in a long at that spot, maybe it's a good spot to at least take some profit off or close your position, and you can re-enter it once the EMAs get retested. And same thing for if the ATR line was on the opposite side. And sometimes you'll see price actually extends way beyond the ATR lines. Those are when I get even more confident in kind of doing a counter trend trade. Although many times you shouldn't be fighting the trend, but when I see that, I kind of get excited and I'm like, okay, if it's this far extended away from an ATR line, it has to at least revert a little bit, and I'll kind of catch a scalp off a move like that. So look for that. If price gets way beyond the ATR line, especially on the 10-minute, even on the hourly, if you see it on the hourly, that's even stronger. Like it's just telling you price is too extended right now, and it's gonna you see it right there.
Mm.
Uh, there, you see it there on the bear, and you also saw it on the bullish. See, it just slapped the ATR line up top, the bearish tick, and then it rejected. And if you go right, I saw it another one right there.
There.
Yeah, this overhead extended beyond it. That's a very good chance that price is gonna bounce back. It's just too far extended. Even though the trend is bearish, we're not supposed to fight the trend. I would just take that scalp because almost always it at least bounces back to the EMAs. In this case, it bounced beyond the EMAs. And if you look to the right, it did the same thing on the bearish tick. Right after it bounced off that bullish tick, it extended beyond the bearish tick right on the right at around 12 at the 12 o'clock. Well, you missed it. You sure? That's not the one I was. Oh yeah, that's it right there. Yeah, and then it bounced right back down.
That's what it was.
So yeah, those
Uh,
the HR lines are very useful if you're looking for things like that. So sorry, I forgot to cover that. That should definitely be included.
so basics of TrendBot. So I took off Buddha Juice. So TrendBot uses an EMA crossover to display a colored background. The colored background coincides with whether we're on an uptrend or a downtrend. So when this red line crosses down, we're on a downtrend and the background's red. When it crosses up, it's green. Probably a bad example right here. So we're technically on a downtrend right here for a couple candles. We cross back up, we go up, we cross back down. Now the background's red. So the biggest thing for me personally when we created TrendBot was not longing when the background's red. So like I've said this a million times, like I cannot resist. Ah, it's gonna go to the sky. And it doesn't, it just dies. So like step one for me was going, can I just not long when we're technically in a downtrend? It's frustrating to have to wait, but ideally you would be waiting for this to cross up, for it to reject, and for it to bounce up. And this happens a lot. I mean, that entry happens a lot. And when you don't see that entry, you don't enter. But you should be going, okay, it's a downtrend. I'm waiting for that first rejection, and this would be your entry. So the background changes. It changes green when we cross up, changes red when we cross down. When a candle then bounces, you're going to see a long. If it rejects, you're going to see a short. It has to bounce in a specific way, it has to reject in a specific way, or else you won't see it. The next time that it bounces, where it would say long, it's going to show a green dot, and those are what we call re-entries. Or a downtrend, it's the same way. So this was a short, that's a re-entry, that's re-entry, that's re-entry, and it just goes all the way down. So as far as what the lines are, if you weren't here for when we talked about that, the technically where they are, it's another indicator. It's called ATR, average true range. That's where these lines are being displayed. So TrendBot is like a bunch of different things that are combined into one. ATR, you can use that as it's like Bollinger Bands or VWAP outer bands. It's a way to show you that price has deviated from where it should be. So if you see like price going outside of one of these lines, that's a signal that we're probably going to snap back inside. As far as what the actual line is that's being displayed on ATR, that's tick. Tick, as Stanzi explained earlier, is the cumulative tick value of the New York Stock Exchange, meaning whether the majority of stocks in the New York Stock Exchange, in a nutshell, are on a downtrend or an uptrend. So it's a great way to kind of keep your finger on the pulse of the New York Stock Exchange without having to have a million tickers up. Just as people would follow SPY in order to see what the S&P is doing, at a glance, it doesn't matter what stock you're on, this is going to show up. So you could be trading Tesla or something, and if you were anticipating that Tesla was going to be a dud this day, as soon as we open and you see red tick, that would kind of further confirm, hey, the rest of the market's dumping. I think Tesla's going to dump. I'm waiting for my entry, but this is kind of keeping you abreast of what is going on for the rest of the market. That is what the curved lines are. It's tick. They flip back and forth. Basically, like a great strategy or a great way to kind of start out with TrendBot specifically is don't short when it's green, don't long when it's red. And when you're if you're having a lot of conflicting messages as far as we're on a downtrend, but you've got green tick, it's just one more thing to go. Maybe this isn't the trade for me. This trade right here is as perfect as it gets. Right off open, it's green. Oh no, we cut back down. It's on a downtrend. Red tick, red tick, red tick. And this day, I don't know what I was doing in this day. Hopefully, I was doing this, but this day was just a short trend day, and that's what trend bot.
So on the daily, it longed all the way back at like 44, 4,500. I don't remember.
Yeah.
But, and then let's say you entered there and you made 100 points. You're like, this is too much. I'm getting out. And you got out and the price keeps going. And you're like, okay, when do I get back in? Every time, every time you see that little green circle, it's telling you this is a re-entry spot under the price for a bullish trend. Um, the first entry is always the best, but if you've entered that and taken profit and want to get back in, then these re-entry spots are basically telling you you can join the trend again safely over here. Um, Obviously, like I said, the initial entry will be the best, most confident one. But if you're having FOMO, you're like, I need to get back on this trend, then it'll provide you places to rejoin the trend. It's basically telling you when price is holding the trend and it's safe to re-enter. And you would stop out obviously if the the the
Mm.
the trend flips, or even if the price closes below the trend, you can stop out and just re-enter on the next re-entry if the price reclaims the trend. Because if you look on the uptrend, I don't know if there were any spots where price closed below, but then just hopped. Yeah, there's spots where it closed below, and you would be like, okay, I'm stopping out. But then you can enter again on when the trend bot either provides a re-entry or price goes right back above the EMAs. So that's
And
kind of a strategy you can use here.
I mean, this is
Enter
sort of a
once.
similar.
I guess another thing I've said this many times. This is a free public indicator, but I would recommend having divergence for many indicators V4 on your charts and watching it on the 10-minute plus time frame. That's also very useful. Just more confirmations. You don't want to fight hourly divergences on that. I've done it plenty of times and kicked myself for doing it.
We are in a daily.
Like right now, you have a daily bullish divergence. That's again suggesting some sort of bounce now, which can be reshorted as long as the EMAs hold. Um,
But I wouldn't be long. Okay, so here's when would you get back in long on a swing? I would be
mhm.
waiting for it to do. If you're like, oh yeah, this is like nothing, the Bulls are totally gonna like do this. You would want like a which is just a inverse head and shoulders, basically.
Could you please cover your approach to risk management for the bot and zone signals you're trading? For the bot and zone signals, um, okay, I'm assuming you just mean for the tools. So, for example, let's say you're in a long off a trend bot or off a voodoo signal. Really, this will your stop. I don't use like, hey, if I lose X amount of money, I'm gonna stop out. The thesis needs to fail. So let's say you entered off a long voodoo signal. The correct time to stop out would be if a candle closes white or red. If you entered off a green, it's telling you, hey, momentum is not bullish anymore. Or you could stop out if price closes below the 10-minute 921 EMAs. That's also telling you, okay, price is not holding this trend. Maybe it's a good spot to get out. So in my opinion, your stop should be based on price, not based on some arbitrary dollar value. The amount you lose should be dictated by your sizing, not by where how at what point you want to stop out at. It just doesn't make sense. You're trading price. Why would you stop out based on a dollar amount in your account? Um, that should completely be determined by your risk tolerance. Like, hey, I'm only willing to lose this much, then size down. Maybe you're sizing up too much if you just have to stop out within a few points. Um, Position size and number of points you're willing to take. So yeah, same thing. It's not more so number of points I'm willing to take in the opposing direction. It's more so at what point are the indicators flipping the opposite way or telling me to get out, then I'll get out. Um, I've kind of covered the main important things I look at on these tools. It's really not that complicated. It might seem like you're looking at a bunch of different things and it might be kind of confusing at first, but when you practice with these tools and you kind of get used to it, it kind of becomes second nature. You know exactly what to look for, and the fact that it's visualized so well for you, um, it makes it really easy. At least for me, it does. Like if I didn't have these on my screen, I can't anymore. I need to have them on my screen because it
Yeah,
just
no.
feels like I don't know what I'm doing. Before this, all I would have was my zones, which is fine.
Like
But
TrendBot
it's just
specifically, like if it's not like I can't visual like I obviously this is super choppy, but like here, like what is an uptrend, what's a
yeah,
downtrend?
I don't know what's happening. If that makes in the back of my head, I kind of know. Like I know we've been going up. Okay, we must be in an uptrend. I could slap some EMAs on and kind of get a better idea. But the fact that it's color coded and visualized, you can see things like tick, ATR lines, TSI and RSI are visualized for you versus having to have them separately on your chart and then having to figure out, are we overextended? Are we not overextended? It's just too much to process at once, and you're just gonna screw up, if
Like
in my opinion.
this to me would be, and I've taken this entry a million times, of being like, okay, here we go, like we're going down, but like it's not a downtrend, it's just a bounce. So you can save yourself by just not like ideally we would come down, bounce up, and do one of those. I mean, every single thing is the best downtrends for me have been head and shoulders.
I don't think going below that's very useful unless you're kind of just scalping with zones. In that case, I do use the 3 minute. But besides that, I've primarily shifted to just relying on 10 minute and 1 hour. Those have just like my success rate. I don't know how many in here are in my Discord. It it's always been decent, my success rate, but it's really gone up um since I started using these tools together because these are already stuff that I would used to look at, but the fact that it's automated now and I don't have to be looking at a million things at once. It's doing these calculations for me and kind of just presenting it in a manner that's very easy for me to visualize and see. It's just made it much easier for me to trade. And it's also made it easier for me to catch my own mistakes. Like when I fight these indicators, I can just look back and say, this is exactly what I did wrong, and I shouldn't have done it. And then it kind of makes you improve in your own trading. What are the vertical green
I can
slash
go, I
red
can,
shaded?
I mean, that's just basically what it's trend about. So Voodoo is based on a lot of the things that TrendBot is based on. It's based on RSI, relative strength index. It's based on TSI, true strength index, as well as tick. So Stanzi can speak to that, but it's kind of throwing all those things together and displaying a
Yeah,
way to kind of anticipate stuff.
yeah. Voodoo's almost it almost is faster than TrendBot. TrendBot in a way is still technically a lagging indicator, except for the tick part, which is pretty instantaneous. With with the what am I saying? With the Voodoo, because it's using RSI TSI as well as tick together to focus on the current candle, it's able to figure out which way momentum is pointing for this specific candle. Um, so many times you'll find tick will flip bullish, kind of like what Trevor has pulled up, and on the next candle you'll see the trend become bullish and support the move.
Where
So
was
that's why I say that's why I put voodoo before everything else, and then I use these other tools as extra confirmation to support the move. Um,
this?
Let me
Was
just quickly answer.
what day was
Um,
this?
what is voodoo based on? Yes, it's based on RSI, TSI, and tick. Like I said, I do calculations to figure out a score for every candle and basically print if the candle is uh, showing a bullish momentum, a bearish momentum, or somewhere in the middle, which is when you see a white candle telling you to flatten your position or don't do anything. About the Voodoo candle, do you look at the current building or the last completed one? Um, Look at the final color of a closed candle. The signal from the Voodoo is not going to print until the candle closes anyways. But that being said, you can still kind of see the candle develop um, and change colors as it develops. So you can get an idea of how this candle is going to close, and in some cases you can front run the candle. So that's why when you're watching it live with the replay, you won't be able to see it because the candle kind of just prints. I don't think you can see it at least when you're watching it live. You can see it change colors as it's developing sometimes. For the 10-minute trend bot, did you say that it's the 921 EMA crossover? That's what's determining the current trend. Um,
Like
yeah.
this,
Mhm.
whatever day this was. I remember this whole middle part. I was like trying to long, or this candle is green because you can see the outside of it, but it's not green voodoo. So if you were trying to long this, you would have just been like ba ba ba. And as soon as this crosses up green voodoo, and the rest was history. And if you miss this, ideally what you'd be doing is you're waiting for that pullback. So it makes an uptrend, but we're above ATR, rejects back down, and then bounces. That was what you waited for. If you didn't catch it here, you waited for here. And I feel like I did this, or at least didn't die on it. So that was good.
Yeah. Um, what else?